Hi, and welcome back to my channel where we talk about one company each week, which could be an interesting opportunity, and we look at the financials to find out if we have maybe an undervalued stock that could be an interesting investment opportunity. And yeah, this week I would like to talk about a new industry and particularly about the gold mining industry. And yeah, one of the major stocks in this area is currently potentially undervalued, and it's Newmont Mining or Newmont Corporation. That's the company we're going to talk about this week. And yeah, before we go into the details of the background of, before we look into the numbers, the financials, and talk a little bit about the circumstances, I give you the bullet points straight away. So what could be the positive points? The positive points could be that in general we've seen a major spike in the gold price, increase in the gold price, which of course makes the companies that actually dig this material out of the ground very profitable and very prone to increase. Then, of course, we have secondly the general valuation of the company, which makes it an attractive, potentially attractive investment, and the earnings trajectory of it. And then we look a little bit at the history of mergers and the potential synergies to see if that could be a potential further growth motor for the company. But of course, there are also downsides, which I give you straight away. For a gold mining company, there comes a large dependence on the price of gold. So if the price of gold goes down, the stock will go down as well. And in general, also another potential risk or negative point is gold mining stocks just have not been a good investment over the last couple of years. So there's always the risk of this sector not really being attractive to investors. And last but not least, we have the mining risk. So it's a risky industry. You have jurisdiction risks. So yeah, it comes with a lot of political risks, but also mining is just always a little bit of a roll of the dice in general. Like yeah, you never really know what you're gonna find. So yeah, that was the summary really quick to give you all the key information ahead of the video. Now let's start into it a little bit more in detail. And yeah, first, yeah, let's have a look at the gold price. So why do I think it could be interesting to look at a gold mining company? Yeah, we see here the gold price has been very much on a upward trend over the last years, but yeah, over the last months and weeks in particular, we briefly reached I think 3,112 US dollars per gold ounce. So yeah, we see very much a large increase here in the gold price. Of course, doesn't mean it's going to continue, but definitely something to consider and something to look at, and potentially something to take into consideration when looking at investments. And now we can take a look at gold mining companies that actually mine this material. And we see that we have a couple of companies here in terms of market capitalization sorted. And Newmont Mining, for the longest time, was the largest company in the sector. So Newmont Mining is still the largest producer, most likely. There is a Russian company called Polius, where, yeah, it could be that they have a larger production volume of gold than Newmont. But in terms of market capitalization, it used to be the biggest one by far for a long time, and just recently surpassed by the Canadian competitor Agnico Eagles and Eagle Mines. And yeah, we could take a look, and that's why it potentially is interesting to see, okay, this other company has surpassed Newmont, and why this could be. Still though, yeah, one of the largest companies, and I think, yeah, if we this is the market capitalization, so of course this is what the stock market thinks. For a stock market, Agnico Eagle is the most profitable one. But in terms of production, so Newmont produced 6.8 million ounces and Agnico Eagle only produced 3.49 million ounces. So still Newmont in terms of production the largest one. And also when it comes to reserves, so Newmont has 130 million ounces in reserves and Agnico Eagle has 54 million. So yeah, if I look at these numbers like production and reserves, I would say probably Newmont should be the biggest company here. But we all know the stock market values the future and values profile of a company. And currently the stock market values Agnico Eagle higher than Newmont. So yeah, let's take a look at Newmont in general, like what is the company about. Let's take a look at the jurisdictions. So we see they have mines all over the world, and we see that they are very much rooted in Western jurisdictions. So let's move my cam here a little bit out of the way. So yeah, they're really much focused on North America, the Americas, and Australia. So they're really much located in the Americas and Australia, and they have of course one mine in Africa. But yeah, I think for gold mining in particular, this makes a huge difference because what I mentioned before, like the jurisdiction risk is huge. So it's very important to always check, okay, does a company actually have its mines in, let's say, stable countries where there is less risk of political turmoil or government takeover. For example, like one of the biggest competitors, Barrick Gold, just recently they have major operations in Mali, and their 250 million tons of gold were seized by the Mali government, and they're still fighting and debating over it. So yeah, that's always risky where you're operating and where your operations are. And these geographies also come because of the acquisitions of Newmont. So Newmont has two of the largest acquisitions in the history of the gold mining industry. So in 2019, they acquired Goldcorp, which used to be a Canadian miner, which brought them more Canadian mines. And recently, in 2023, they acquired the Australian company Newcrest Mining, which brought them some more Australian assets. And this is an important point to consider as well. Even though all the there's constant M&A, merger and acquisition activity going on with gold mining companies, I think these very, very large acquisitions really have to factor in the performance. So everybody that's worked in a big company before understands that how difficult it is to merge different systems, when it comes to purchasing, HR, legal, IT, everything has to be streamlined. All the processes have to be aligned with each other, and that takes time, cost, and effort. And of course, it's easier if you have these very large mergers and acquisitions, it makes it even more difficult. But also, of course, it's an interesting opportunity to save costs in the future and to improve results going forward. And so this is an interesting aspect to watch and to keep in mind when we talk about this company. Okay, so let's talk about, let's take a look at the stock price. Let's take a look at the actual stock price. And we see Newmont, it basically, in terms of stock price, like oversimplified saying, it has done nothing. It has done nothing. Let's contrast it back to, again, we see the gold price here really going up, and we see Newmont mining price here really going even on a slight downward trajectory. So this is very interesting, and we see a PE ratio of 15.46. So probably if you have seen a couple of my videos, you know that the goal here is to really find undervalued potentially undervalued investment opportunity, and this is what could make this stock interesting. Of course, always make your own mind, make your own research, but PE ratio of 15.46 is in general a cheap valuation. So if we take a look at this website that analyzes PE ratio trends, so we have this PE ratio of 15, above 15, and the 5-year average is 28.86. And yeah, with these larger 10-year and 15-year, I would be a little bit cautious because they take, I think they muddied a little bit the trend of stock splits and mergers and acquisitions. Is hard to capture in the data, but in general, it's safe to say that the PE ratio average of Newmont Mining is larger than 15.13, and which is a little bit crazy when we think about we have a by far record high of the gold price. So it's a very, very kind of contrasting logic here. And also when it comes to peers, so here are some peers listed. Freeport had this 22.225, Royal Gold 30. So yeah, I would say, I mean, if we take a look at the large gold mining companies, they usually have a PE ratio of above 20. So a PE ratio of 15 something, 15.46 or 15.13 is crazy. And the forward PE ratio, took a look at the forward PE ratio, which calculates earnings projections, is even lower. So that's even below 12. That's an 11.48 forward PE ratio for gold mining stock that is digging out of the ground a metal which is on a record high. So yeah, this for me makes it very interesting, to be very blunt. This contrast in valuation and actually earnings potential that we have here. So very, very stark contrast and potentially a big opportunity here. But again, make up your own mind. And of course, it's tied to risk, because I think one reason why these gold mining stocks are not going up crazy is because usually in a downturn, and today we've just seen a big downturn because of the tariffs announcements. They sell off with everything else. So even though the gold price is still very high, gold mining stocks are at risks of this downturn, what I mentioned earlier. But just in terms of logic, valuation, and pricing, I think there is something big here. And yeah, now as always, let's take a look at the annual report of the companies to have a little bit of a look at the numbers. And yeah, let's take a look at the highlights, at the financial highlights. And I think very interesting here, very telling what we can see here. So sales in millions. So yeah, 7 billion increase in sales. Very, very good. These are crazy numbers. So earnings before interest, taxes, depreciations, amortizations, EBITDA, crazy increase. This is, of course, I think a little bit, this number I would take a little bit with caution, because yeah, they had these big acquisitions and targets, so that's why this number is a little bit higher. But free cash flow, look at the free cash flow, 2,916 million compared to 88 million in 23. I mean, that's brilliant for if you're a value investor looking for free cash flow. This is a crazy increase in free cash flow. The dividend went down a little bit. I'm pretty sure they will increase the dividend. But yeah, just looking at these highlight numbers, the crazy sales increase, the crazy free cash flow increase, and these are already amazing numbers. And now think back about the stock price. We look at the stock price. The stock price looks like they had a slight loss in their numbers, but no, we have a crazy increase in numbers, more than 100% in some parts. And of course, it's important. It's a mining company, so it's about how much gold are they digging out of the ground, and production numbers also look good. So here in the attributed gold production, 6.8 million tons of gold production, ounces of gold produced. it's an increase, a very good increase, and yeah, attributable gold production. This number is higher than the previous one because, of course, in the gold mining industry, a mine is constantly trading. The real estate under which the mine is on is constantly trading, and shares are traded between mines. So when it comes to production, a lot of times those numbers have to be shared between different players, different companies. But I think this is why this second number is a little bit higher than this first number. Let's. And average realized gold price. One second. Average realized gold price. That's a very important metric for a gold mining company, of course. $2,408 was what the gold price was realized in the last quarter of 2024. Let's take a look where it's now. It's above 3,000 for a couple of weeks now. So we can definitely assume that for the next earnings that will be coming out in April, end of April, the gold price, the realized one, will be closer to 3,000. So another very, very big increase of maybe more than 20%, 25%. Yeah, I'm very, very curious for that new earnings report. And of course, important also to take a look at the costs. So the costs of sales going up substantially. Okay, that's not what we like to see. Yeah, inflation is very much hitting the sector. So mining gold has become more expensive significantly. This is also a reason why the stock price hasn't been so attractive. But here, I think interesting for us is the gold cost per ounce of sales. So and specifically here the all-in sustaining costs. So these are very much the costs. Okay, what kind of gold price do we need? We have all-in sustaining costs of 1,516. So we need to have at least $1,560 to be profitable. We have more than double that price. We had more than double that. We had double that price. So yeah, perfect circumstances here for the company, even though they have large cost increases, to be still majorly profitable. And I think we will see a reduction in this trend. So we will see a reduction in this all-in sustaining costs and the cost of sales going down for this company as the synergies between the different units and the different companies get better over the next couple of years and months. And of course, they also have other metals, so gold equivalents. Like they have, when you mine, you don't mine and throw everything away. They have silver, they have copper, and the costs for that as well are interesting. But I think for us, the 1,516 compared to a gold price of 3,100 is the interesting metric. So just from this picture, from the financial highlights, for me, very, very interesting. And we see here gold reserves, substantial gold reserves, more than double what the largest competitor, Agnico Eagle, has. Gold produced 6.8 million ounces. Very good free cash flow. And I think if the stock price remains this low, they will start doing more and more stock price repurchases, therefore increasing shareholder value or increasing the dividend. So that could be pretty interesting. Okay, now we have very much positive story. Let's take, before we finish the video, let's take a look at the liabilities of the company. And we see here in the liabilities that we have, not really much. We have actually a reduction in liabilities, which is very, very good compared to the previous year. So great here as well, great picture. They're still very, very high. So the debt and the current liabilities, so that's very much the debt, the pure debt that I'm looking at, of 7 billion is very, very high. But it's not on a bad trajectory, and I expected the management to put further emphasis on putting it down. Of course, what you always have for a gold mining company is reclamation and remediations for liabilities. These are, for example, costs for in terms of legal troubles with mines or cleaning efforts or community investment efforts for all the damage that this industry does. Yeah, of course, it's not an industry that is kind of beneficial to the environment around it, more than the contrary. But yeah, I mean, as long as these numbers, the debt and the reclamations and remediations for Newmont don't really spike anymore crazy, I think we're on a good path as an investment, for an investment. Yeah, so thank you for taking a time to go with me through Newmont Corporation, through the stock profile of this gold mining company. Yeah, just briefly to summarize, I think a very interesting valuation of a PE ratio of 15 when the gold price is at a record high and going up big time. And we looked at the profile of the company. So it has a history of mergers and acquisitions, which could be favorable in the future going forward, reducing costs further. And they have a large amount of debt, but it's going down actually. So yeah, with an interesting company. Let me know what you think. Take a look at it yourself to see if it's an interesting investment, and see you in the next video.